Good afternoon, everybody. Let's talk today about Great Britain against US dollar. So, the British pound remains under pressure after a combination of political uncertainty in the UK and broad-based US dollar strength. The first major catalyst was the internal political struggle that ultimately led to the resignation of Prime Minister Keir Starmer. His departure came after growing disagreements over fiscal policy, government spending plans, and increasing pressure from both political opponents and members of his own party. The political uncertainty emerged just as Great Britain pound against US dollar was fighting for control of key 1.36 area, creating an unfavorable backdrop for sterling. The second wave of pressure came from concerns surrounding the incoming government's fiscal agenda. Markets remain cautious about the possibility of larger budget deficit and higher public spending, especially at a time when economic growth remains fragile. Combined with renewed dollar strength, this triggered a second sell-off in the pound. As a result, Great Britain pound against US dollar lost support around 1.34 and 2 and declined toward the major long-term support zone near 1.31 and 5. Additional pressure came from the latest UK PMI figures, which were weaker than expected and reinforced concerns that economic momentum is slowing. Softer business activity increases the probability that policymakers may eventually need to consider additional stimulus measures if growth continues to deteriorate. Meanwhile, the US dollar continues to receive support from a much stronger macroeconomic backdrop. Market participants are increasingly discussing the possibility of 2 or even 3 additional Fed rate hikes before year end, and policymakers attempt to contain inflation risks. An interesting divergence is emerging in the US bond market. Short-term treasury yield continue to react positively to expectations of tighter monetary policy, while longer dated, for example, 30-year yield remain relatively restrained. And this suggests that investors still see a possibility that aggressive tightening could eventually slow the economy and create future disinflationary pressures. For now, Great Britain against US dollar finds itself caught between domestic political uncertainty, weakening economic data, and a Federal Reserve that is still perceived as one of the most hawkish major central banks. Unless UK fundamentals improve significantly, sterling may continue to struggle against the US dollar despite periods of short-term stabilization.